Welcome to the Economy Magazine at I-24 News, where we give you a daily view on world markets and the global economy. I'm Natalie Ehrlich. Coming up today, U.S. President Obama marks an historic trip to Kenya, and we discuss emerging opportunities in East Africa. Let's start now with the headlines. UBS beat the street in the second quarter, posting net profit up 1.21 billion Swiss francs, 59% from the year earlier. The Swiss bank unveiled its earnings release just a day earlier after a local paper published a report Sunday that included an inaccurate figure for Q2 profit. UBS said its key capital ratio was 14.4% in the second quarter, compared with 13.7% in the first. The ratio is a closely watched indicator of bank stability. Well, Chinese stocks, meanwhile, endured their sharpest daily percentage drop since 2007 on Monday. Worries mount now as analysts watch whether Beijing pulls back on market stimulus measures. The Shanghai Composite fell 8.5% at 3,725.56 cents, its second straight day of losses. China's main index, however, is still up 6% from its recent low on July 8, but still off 28% from its high in June. The smaller Shenzhen Composite fell 7% to 2,160.09 cents. Well, U.S. car regulators slapped Fiat Chrysler a record fine of $105 million, citing lapses in safety recalls for millions of vehicles. The penalty sets a new precedent in the agency's dealings with car companies. The previous record imposed on Honda was $70 million, and the one before on GM totaled $35 million. And Israel's Teva Pharmaceutical Industries announced an agreement to buy the generic drugs division of Allergen. The purchase, which is worth $40.5 billion, is the largest ever acquisition by an Israeli company. The Tel Aviv Stock Exchange responded positively to this news, with Teva's shares up 14% in the hours after this deal was announced. Well, U.S. President Barack Obama capping his tour of Kenya, electrifying crowds with an emotional speech citing his own roots to the East African country. Kenya has one of Africa's fastest growing economies, which also captured the attention of the president.
This was Barack Obama's fourth visit to his father's homeland, but his first as President of the United States. He arrived in Nairobi on Friday for a high-security visit devoted to combating terrorism and boosting the economy. During his time in Kenya, he spoke at the Global Entrepreneurship Summit, marking the first time it was hosted in sub-Saharan Africa.
I wanted to be here because Africa is on the move. Africa is one of the fastest growing regions of the world. People are being lifted out of poverty, incomes are up, the middle class is growing, and young people like you are harnessing technology to change the way Africa is doing business.
Despite the jihadist threat it faces, Kenya is now the largest economy in East Africa, and according to the World Bank, its GDP should increase by 6% this year, a valuable gain for the country, the continent, and even the world.
It means more growth and trade that creates jobs in all our countries. It's good for all of us. This continent needs to be a future hub of global growth, not just African growth.
Textiles and agriculture are among Kenya's many assets, and last year direct foreign investment surpassed $1 billion. The country has dreams for further growth and hopes that President Obama will advocate for Kenyan business after his historic visit.
When you go home, and indeed as you travel around the world, tell those who you meet about what you've seen here in Kenya. Share your experiences and let them know that Africa is open and ready for business.
Despite optimistic futures, business is still weak, even with the help of the African Growth and Opportunity Act of 2000, which gave sub-Saharan countries preferential access to the U.S. market. Trade between the U.S. and Kenya came to only $2.2 billion in 2014, a reflection of the generally slow commerce between the U.S. and the entire continent. Earlier this month, Barack Obama signed the Act's renewal for 10 years.
Now from Kenya, we are joined by Philip Walton, co-founder and COO of BRCK. Thank you very much for being with us.
Thank you for having me.
Well, what was the main economic takeaway from Obama's visit?
You know, I think it's interesting hearing President Kenyatta speak just a minute ago and talk about the fact that Africa is open and ready for business. And I think as we, saw so many investors and entrepreneurs from the West as well as from the East come and visit, it was really the surprised look on their face that Kenya and Africa in general is innovating and developing really great new technologies, new business ideas. And then, in fact, we are prepared to be a continent that can chart our own course and even begin to give back with our technology and our ideas to areas outside of Africa.
Well, thank you very much for those points, Philip Walton, co-founder and CEO of BRCK. Now on set to discuss opportunities on the African continent, we are joined by Marcel Juliet Sal-Shaman, partner and entrepreneur at Anthill. She is also the chair of the Israel-South Africa Chamber of Commerce. Thank you so much for being with us.
My pleasure.
Well, you are originally from South Africa and frequently visit Kenya as well as other areas there. What is standing out to you right now?
Well, I'm delighted to see so much of this, let's call it hype, but also from the point of view of presentation of the opportunity of Africa and Africa having risen. Basically, I see immense opportunity in Africa, and having worked in Kenya for the last couple of years and also working in South Africa, I believe that Africa, indeed, we need to do more in Africa in terms of investment, and there is really a lot of opportunity in major areas of agriculture, financial services, infrastructure.
Well, there certainly are a lot of development needs on the African continent, but how viable is this as a business opportunity?
I think that from the point of view of business, Africa has its own time, it takes time. But if you look at Africa as a continent and you look at the situation that as far as the middle class, it's got the fastest growing middle class in the world. It has got one of the largest burgeoning youth populations around the world. And you're seeing a situation where there is real opportunity and need for solutions, for tech solutions to come in. Besides the fact that Africa itself is forming its own solutions for its own continent, which is really incredibly amazing to see. And also you're having a situation, interestingly enough, where you're having a reversal of the diaspora. Instead of going from Africa to the US, to markets like the US and the EU, you're seeing a reversal of people coming back to their home countries, seeing the immense opportunity that has arisen and where they can play a role.
And you highlight a number of bright spots that appear on the African continent, especially in the East. Can you highlight that a bit for us?
I would think that as far as areas are concerned, the fastest growing areas are certainly those areas that are facing the consumer, so consumer-facing industries such as agriculture, such as the banking or the financial sector, and such as infrastructure technologies. And those are the ones that I certainly think are amazing opportunities to pursue. I also think from the point of view of renewable energy and the fact of so much waste today that is becoming gold, the new gold. Aside from the regular resources that we used to look at in terms of gold and oil. And oil today, if you look at Kenya, oil also has been one of those drivers in terms of the economy. So you're seeing little cities coming up around the areas where they've discovered oil, which they recently discovered in 2012. So those are also precursors to more movement and more development.
Well, you mentioned oil, and Nigeria is really big on that. And now it has surpassed South Africa as the top economy, the biggest one in Africa. What are your thoughts, though, coming from South Africa in these areas for inefficient markets that you can build infrastructure?
I think inefficient markets, again, because of the inefficiencies of markets, they allow you to actually go in and capitalize on certain opportunities. But I would say that if you look at Nigeria, you look at South Africa, you look at Kenya, wherever you look, unless you have a solution as far as an economy, which is a solution which is one that takes into account sustainable development from the point of view of social impact, not only looking at what is people look at providing solutions to people, they think of it in terms of charity to Africa. I definitely have to look at a situation where you need to take the society into account. That will be your sustainable solution for Africa.
Thank you very much for your insight. We'd love to have you on again. Staying now on the African continent, mining does remain there a key sector of Congo's economy, but the work itself is strenuous. Let's look.
Using a pick to pound the rocks, David is looking for cobalt. He's one of over 100,000 men working as artisanal or small-scale miners in the Democratic Republic of Congo. It's a difficult job, but for many of these men, it's the only way to survive.
We're not formally employed. We've just come to find something to eat.
According to the miners, this land belongs to the relative of a senior Congolese leader, who's allowed them to mine in return for 30% of their production. It's only the men who go underground. Women and children stay on the surface to wash the mixture of earth and rock, looking for cobalt.
I came here to help my husband. There isn't any work apart from this. The work is hard. He can't do it alone.
Our husbands don't have jobs. That's why we do this hard work, to find ways to feed our children and send them to school.
This cobalt will be sold to Chinese dealers operating a few kilometers from the mine. But the miners don't trust them, claiming they deliberately cheat the scales.
When you bring them 100 kilos, those 100 kilos become 80 kilos. So you've already lost 20 kilos. When you take your product to Kolwezi, for example, they'll give you 10% cobalt content. But when you go to the Chinese, they'll give you only 5 or 6%, you see?
These artisanal miners aren't working illegally, but they aren't protected by the law either. Left to fend for themselves against unscrupulous dealers, they earn a few $100s a month for a mineral that's in global demand.
Moving back now to world markets, we are joined on set by Muriel Maturin of Gornitsky. Thank you very much for being with us today. So you have some two hot topics for us, China and gold.
That's right. Well, first of all, China for the first time revealed that in the last 6 years it increased its gold reserve by 60%, reaching up to $60 billion worth of gold. However, that's opposed to $3 trillion of US cash currency that they hold. So they still are more in the dollar. But that shows that there is a tendency which is basically supported by other BRICS countries, BRICS being Brazil, Russia, India, China, and South Africa, who are all trying to find an alternative to the dollar. So
they've developed this new development bank.
Exactly. So we're going now to see not really the feud between the dollar and the euro, but perhaps the feud between the dollar and the gold. And that brings a lot of attention again to the gold, which is indeed the oldest currency in the world. For 2,000 years, gold has been not only a precious metal for jewelry, but also an important feature of economy. Interesting enough, in 1770, Sir Isaac Newton, being at that time the master of the mint in London, set up the price of the dollar, of the ounce of the gold at $18 per ounce, and that price remained for 200 years. Only in World War I, the price went up, and eventually it was fixed in 1934 at $35 per ounce, which remained until the era of Nixon in 1971. At that time, in 1971, for the first time, the US decided to relinquish the automatic transferability and the link between the dollar and the gold, and since then, prices of gold went up and down and up and down. We remember not long ago it reached $1,800 per ounce, and today it's in the area of $1,100.
Right, we've seen this huge slump in gold, so that's perhaps a good time for China to be buying up on this precious metal.
So it's interesting because gold, at the same time that it is a metal which is being used for jewelry and so forth, it's also a measure against inflation. Obviously, on gold you don't earn interest, you don't earn dividend, so it's competing against the stocks, it competes against interest rates, but at times like today when interest rates are down, this is perhaps one way to secure personal wealth, and a lot of people personally are buying here and there gold medals, gold coins, and obviously the richer people are buying gold bulletin. Interesting enough, Warren Buffett said once that if you take all the gold in the world and you try to put it in one big cube, it will be only 20 meters each side. 20 meters, cubic meters will be the size of all the gold of the world, and still it's such an important feature.
But we are expecting the dollar to go up now with this expected rate hike. So gold versus the dollar, are we still bullish on gold here?
So it's going to be interesting to see the euro, the gold, and the dollar all competing each other.
Okay, well, it'll be an interesting battle there for the markets. Thank you so much as ever. We do very much appreciate your insight, Muriel Matalon. That does wrap up our show today. Do stay tuned tomorrow, same time, same place from the Jaffa Port in Tel Aviv. I'm Natalie Ehrlich. Thank you for watching.
Thank you.